So noise is very topical at the moment in the behavioral science world because of the release of Daniel Kahneman's latest book on the topic, along with Olivier Saboni and Cass Sunstein. So it's become a sort of hot topic, and so we've been looking at how does this apply to investing. And specifically today, what I want to show you is kind of give you this very easy intro into the topic, and then show you how it gives us a very different lens to think about specifically passive investing, which hopefully will be an interesting aha moment for you, like it has been for us. So as Tracy said, when we're talking about noise here, we're using it in a very specific context, and we're talking about noise as an error in judgment. And this is a judgment specifically where accuracy is our leading objective. So this is not all judgments and not all decisions are like this. So when you're choosing what ice cream you're going to eat, when you're choosing what color to paint your house, these are preference-based decisions. Accuracy isn't even in the game. You make other decisions. For instance, your friend asks you, are they looking lovely today? And you might think that their most important value is honesty, so you tell her, oh, she's not looking particularly good. Or you might feel kindness is a more important value and say, you're looking lovely, feel confident, and have a great day. Now, that's a values-based call, and a values-based call is, again, a different type of decision. So when we're talking about judgment here, we're talking about judgment where what we want is accuracy. And this could be accuracy about predicting the future. So you can think of the meteorologist and the weather forecast in the morning. You'd like that to be accurate. Or you can think about it in terms of making a decision where you would like to be accurate. So if a company is deciding which product it's going to market, it would like to choose the one that is going to be most appealing to consumers at the moment. And so, again, accuracy is an important part of what you want from this judgment. So that's what we're talking about with noise. It's judgments where accuracy is important, and noise is something which is detracting from the accuracy. So to give you a sense of the sort of the history of this, the earliest studies in this noise space that really started opening this up as a concept were really in the justice system in the US. And if you've watched US court dramas, you'll know that how their system works, which is different to ours, is that guilt is determined by a jury, and then the judge does the sentencing. And so the initial studies that were done around noise really looked at the sentencing of judges and looking at, do you get the same kind of sentence for the same kind of case, regardless of which judge you're in front of, or are there other things that play a role? And when they started digging into this, they realized that actually there were a lot of times where the decision was influenced by something we might not want the decision to be influenced by. So it could be the personal history of the judge, the environment they grew up in, specific crimes that they feel particularly sensitive about. It could be things like what the judge had for breakfast, whether the judge had breakfast, what their blood sugar levels are, or even the weather outside. And these are all things that we don't want to be playing a role in these decisions. So you have an expert, has a lot of knowledge, you want accuracy from their decision, and noise are these kinds of interfering factors that shouldn't be considered. And then when they've continued to do studies on this sort of thing, there have been other spheres that they found issues with noise. Fingerprinting is one of those examples. If you give a beautiful fingerprint at home affairs, it's not those kinds of fingerprints. That can be done by a computer. But in the criminal space where you have partial prints or just sections of a print, judgment, accuracy becomes a great concern. Similarly with the diagnosis of certain illnesses. Some illnesses can basically be diagnosed by a machine, but other diagnoses requires the judgment of an expert, and you'd like an accurate answer. And these are all the kinds of spheres where we've discovered that noise can play a role. And investing is another one of these spheres where noise can play a role and can create an error in the system. But it's not the only kind of error. And actually, noise is the kind of error we haven't really been speaking about. What people speak about a lot in terms of people making errors in judgments is bias. Bias is what you always hear behavioral scientists talking about. It's a very exciting topic. Everyone likes to talk about it. Some of the aspects of bias are a bit darker, but it's something that is very visible. We look for bias, we see bias. So again, in the American justice system, you'll have conversations where they're saying, oh, well, are judges biased against certain ethnic groups or certain cultural groups or certain life choices? And these these are forms of error that in some ways can be the visible enemy. But noise is often this invisible enemy that's running around underneath the system. So what is the difference between these two types of errors? So here I show you a visual that became popular about 10 years ago, again in a shorter article that Daniel Kahneman and some co-authors wrote that really started to pull together the noise literature as a single topic across all these different domains. And the way they illustrated this was using a dartboard. And the idea was really that you want accuracy, so you want all the shots in the center. When you have bias, what's happening is you have all the shots together, but they're off to the side, or they're too high, or they're too low, but they're still clustered together. The mistakes are all in the same direction. With noise, the mistakes are going in different directions. The center may still be the center of those noisy decisions, but there are more errors in the system as well, and then you can see as well the example where it's both noisy and biased. So it gives you a very visual sense of what can be quite a challenging statistical concept. And just to give you a sense that you already can now start to recognize noise, let's have a look at examples. So this is 3 examples where I'm not telling you where the target is, but you can still see the noise in the system. So you can still see that in the first block, it's the least noisy, the most clustered. There's the least divergence. In the middle box, you have the most noise, the most divergence between the circles. And in the third, it's somewhere in the middle. So just from understanding that I've just given you in these first few minutes, you can already start to see visually when there is more noise and when there is less noise. In order to tell if something has bias, we need to know what the accurate or true value of something is, which is what I've added here. So you can get a sense that you need more information to diagnose bias than you need to diagnose noise. You can now see that the first one is very biased, the second one is not particularly biased, and the third one is biased and noisy. But you needed more information to be able to see whether there was bias than you did to see if there was noise. So hopefully that gives you a bit of confidence that actually noise might feel like a bit of a strange concept compared to bias. It's not as clean, but you can already start to spot it. But where do these things come from? And then another layer that can really make these topics a little bit confusing is how we use the term bias. Because what you may have heard many behavioral scientists talk about, which is psychological bias, things like confirmation bias or hindsight bias, they can actually create both statistical bias, one form of error in judgment, and statistical noise. And it's all about whether the errors are going in the same direction. So let's look at a bias that comes up often in the investing world, which is called anchoring. So anchoring is when a number that should be irrelevant gets taken, is kind of floating around, and as a result, it influences our judgments or our decisions around another number that has nothing to do with it. So a very famous set of studies were done where they typically asked a bunch of Americans how many countries there were in Africa. And they would create some kind of anchor. So for instance, what they could do is you'd go into a room and they would have a screen up and it would randomly have the number 8 on it, or the number 80. And they found that if they had the number 8 on the screen, the guesses of the group were much lower than if they had the number 80 in the screen. So even though this number was irrelevant, it was anchoring the guesses that people were having around answering a question which does have a true value, how many countries there are in Africa. And so that's an example when it's up on a screen in the front of the room where you would get statistical bias from the psychological bias. Everybody would be making a mistake in the same direction, either too low or too high. Now, the difference with noise that we can still look at anchoring with is, imagine they came into the room to answer this question and there was nothing on the screen, but there were personal screens in front of each person with different numbers. Some people had 8, some had 80, some had 800. Now, that number would still act as an anchor. It would still distort the answer that people would give. It would still anchor them, but now it would do so in different ways. They would be making mistakes in different directions. Some would be too low, some would be too high. The problem then is what you get is noise, because the mistakes are going in different directions. The errors in accuracy are going in different directions. So the same bias, anchoring, can produce both statistical bias and statistical noise. Other things that can be contributing factors to inaccuracy, one of them is just objective ignorance. When I was booking my trip back in June 2019 to go overseas in March 2020, I had no idea, and I couldn't have any idea that I would not be able to make that trip. That's objective ignorance. There's just a limit to how much we can predict into the future, how much we can know about future circumstances. Then there's differential weighting of factors, which is a slightly different thing, which is saying that we may agree on what things are important in a decision, but we may think that different things are more important or less important. So if we go back to the criminal justice system and we think about a judge giving a sentence, or you can think about a parent giving a child a punishment, two things that we often think are important in this context are things like what was the intention? Did the child or did the criminal intend to create harm? And the second one we often think is important is repentance. Is this person sorry that they did it? Do they want to not do it in the future? Now, you could have two different judges and they think both of these things are important, but one judge thinks that, intention is far more important than repentance after the fact, and another judge thinks repentance after the fact is much more important than intention beforehand. And this is going to create noise between the two different judges because they're weighting different things differently. So these are different sources that can create both bias and noise in the system. So now that you've got a little bit of an intro, let's test your knowledge. And for a second, I just want you to think, based on everything I've said, when we're talking about judgment, when we're seeking accuracy, which is the biggest enemy, bias or noise? If you're like most people, you probably had a fairly instinctual answer. So you may guess from the name of this presentation, but the answer is noise. And this is something they've been able to do because you're looking at accuracy, and in many cases you do have true values. These things can be calculated and measured in many decision-making contexts. And so they've found again and again that we tend to think bias is going to be the larger problem, but what we tend to discover is that noise is actually the far greater enemy. So if noise is this great enemy that makes our decisions less accurate, what can we do about it? Okay, well, there's a huge noise reduction toolbox, and I could, lecture on this for a semester, and there are courses that literally are semester long on this topic. Today, I'm going to give you 3 noise reduction techniques to think about. The first one is one which I've chosen because it's something you can start using in your life and your decisions straight away, and the second and the third ones are ones that are highly relevant to the core range and our conversation today. The third one is my favorite, and you'll see why. So the first one is disaggregation of factors. And disaggregation of factors looks at the fact that we can reduce noise by being more disciplined at how we look at the subcomponents of a decision. So we go back to the example of a judge choosing a criminal sentence or a parent choosing a punishment for a child, where you think that both intention and repentance are important. One of the ways you can reduce noise in that decision making is instead of just making the decision on the fly, you can write down, okay, these are the 2 things I think are important, and how good or bad do I think each of these were in this specific case. Now, the exercise of writing it down in a disciplined way and specifically thinking about each of them one at a time has been shown to reduce noise. So rather than just sort of feeling it and having a sense for it or an instinct for it, by putting it down in a disciplined way, you can reduce a lot of noise. And this is something you can start using today. Any decision you're making, think about what factors you want to take into account, look at each factor independently, and then make the decision based on seeing all the factors in that way. 2 other ways we can reduce noise, and as I said, there are many, but which are relevant for today's conversation. The second one is rules. So rules, again, are a way of taking certain problems that can happen with judgment. If you have rules, so for instance, traffic offenses, if you do this, the traffic fine is this. If you do that, then the traffic fine is that. It takes out this layer which could be interfering. It takes out the particular mood of the traffic officer out of the equation. It takes how penitent you are when you apologize. Rules can really simplify and reduce a lot of noise in certain contexts. And for instance, in the core range, this is used at the asset allocation level. Another method, which is the kind of really fun and interesting one for today, is the aggregation of experts. And this is a fairly intuitive idea. When you go to the doctor and they give you a diagnosis that seems very severe or something that doesn't seem quite right, what do? Your instinct is to get a second opinion. If it's very similar, the first doctor was probably right. If it's very different, or maybe you need a third opinion. And so we naturally, when we're dealing with experts, have a tendency to go, well, if we have more experts, that should be better. If we look at the South African justice system, we do a similar thing. The more serious the court and the decisions it's making, the more judges we have, with the most judges sitting on the Constitutional Court. So again, we've got experts, we're taking experts at the top of their game in their field, and we're aggregating a whole bunch of them. And so, but generally speaking, there are limits to this. We can only speak to so many doctors, we can only have so many judges. One exception, which is kind of exciting in this context, is the one place that you can aggregate pretty much every expert in a field is in an area like investing, where you have a market. Because a market naturally and organically aggregates all the experts that are making decisions in the sphere into a single thing. So you don't have to phone around and ask every asset manager what their view is on every stock in the world, something that would take an infinite amount of time to do. Well, not infinite, but certainly a great deal. You can literally just look at the market, you can just look at the index, and you have that full aggregation of expert opinions all in one. And so this, when you see this, it gives you a different lens to think about passive investing. And so you go from seeing passive investing as being not active to thinking about passive investing as all active. And so the tension between the two actually looks very, very different. They're not sort of one is not the other. It's actually that passive is embracing all active management and pulling together all active decisions in the market into a single form. And so hopefully that's given you a very different way to think about passive than we normally do. And it's quite an interesting and exciting one that this noise lens gives us. And with that, I will close out with a quote from the book that is particularly helpful, and one that's always worth bearing in mind whenever you're making any kind of judgment, which is, where there is judgment, there is noise, and normally more of it than we think. Thanks so much, and back to Tracy.
Thanks, Amy. That was really interesting, as always. I said we always have such interesting conversations. So one of the questions we got here, isn't noise just market volatility? What's the difference between the two?
So I think that's a very natural thing to instinctually feel when we start looking at noise in relation to markets, because we do tend to think about volatility in that way, that it's kind of quite noisy in the sense that it's not giving huge amounts of value, just kind of going up and down. So I think it sort of feels like the same thing, but actually when we're talking about noise in investing, it's one layer deeper. The noise is actually the divergence in opinions in the underlying market participants. It's the part that's invisible, that the index has actually absorbed for you. So the actual noise is the fact that every single market participant has a different view on the true value of a share or the true value of a bond. And that underlying divergence between all the market participants, that's the noise we're talking about here. And so that also gives you a sense of where that market volatility comes from, because that index is summarizing all those different judgments, and all you need is one judgment in that system to change and the index will move. So you just need one market participant to think, oh, I think this is better value than that, sell the one, buy the other, and the whole index moves because the overall judgment of the system has changed.
I think it actually makes me think of an analogy at a previous company I worked at, and they had quite a few top managers, and sometimes the one manager would be buying a stock, and then within the same company on the same day, different managers selling that same stock. And I think that just illustrates really nicely the different views, even among experts, people who do this day in and day out.
Absolutely, that's exactly it.
And then the last question I have for you here is that in the investment world, we see a lot of layers of intermediation. I mean, we have fund managers, we have platforms, we have DFMs, we have planners. And what impact does that actually have on noise?
So it's a very interesting question, and it kind of goes back to what you said in your introduction, where you said about the fact that in investment we have all these different judgments, and there are so many different judgments in the system that I think you can immediately see, well, you're going to need some intermediaries. You can't just have one person making all these decisions. And you also get the sense that there are different types of decisions in the system. There's the person that's going, what is your goal? What are your financial circumstances? How do I, create the right risk profile for you? Through to the person who's deciding whether they should be investing in China or pulling out of China with the current things going on. Those are two very different decisions. So you can feel there needs to be different intermediaries in the system. But the question is how much? And what the noise lens gives us is an understanding that when we give a decision to someone who is more specialized in making that decision. That can be beneficial. It can reduce noise. The problem is you've also added another decision to the system, which is identifying that specialist. And so the question is, if you can identify that specialist really effectively, then you can reduce noise overall by having that additional layer. But if it's really difficult to identify that specialist, then what you may do is have increased noise in the system, even though you're trying to go for the benefits of specialization. And that's the extra lens that noise gives us in thinking about intermediation, is how well can we identify the necessary expert in this layer of intermediaries.
I think that's a really great framework to use when assessing, like you're saying, when you're weighing up the pros and cons of should you or shouldn't you add another layer. Cool. Thanks very much, Amy.
Absolute pleasure.